Welcome everyone. Whether you're new to us or to Naked Accounting that is, or an old hand, if you've seen these before, we've been running these once a month. I'm sorry, the material's largely the same, and the things that approximate to jokes, you clearly won't be funny. They're probably not funny in the first place. So I'm just going to kick off. Introduction. My name's Malcolm Veal. I'm been a chartered accountant now for more years than I care to remember. Oh yeah, the numbers on the screen. I run a small practice. We are a digital-only firm. We use tech that we could have been doing MTD for years, but I know most people haven't. There's an old saying that there's only one thing that always stays the same in tax, and that is that it never stays the same. It always changes. And that's what it's like now. There's lots of changes happening. There are always lots of changes happening in tax. This is a bit of a quick fire guide. There's some links and things at the end if you want some more information. And your level, I'm not assuming no particular level of knowledge from anybody attending this webinar. Some people may kind of know it very, very well, but are just looking for some extra checks and pointers. Others may think, I've vaguely heard of this, I really ought to look into it. Maybe, just possibly, you've had a horrible brown envelope, which has said you're going to be doing Making Tax Digital. Those envelopes, we are told, have started to roll out. At the moment, no clients have actually said they've received that envelope, but they will start. They have started now, and they will start in a kind of downpour. One thing, if you are only trading through a limited company, whether it's for property or for income or for a business, Making Tax Digital for self-assessment is not relevant. Well, the things I'm about to run through are only relevant for individuals paying income tax. They're not relevant for a limited company. Okay, and I've got a colleague listening in who may answer any questions. If you've got any questions, please put them in the chat. I will be picking that up. Sometimes I don't spot that. I might only pick it up at the end. And I've got a few questions that people have asked before that may not come to your mind, but they are ones that people have wanted to ask before. So I might include them at the end as well. Oh, there are. Type of questions in the chat. Okay, Making Tax Digital, MTD. And I'm going to tend to call it MTD all the way through. Tax returns changed 25 years ago. Self-assessment. For those of us of my vintage, you may remember pre-self-assessment, and that was a totally different world to self-assessment. But this, in a way, is a much bigger change, certainly in terms of what you have to do to be compliant. The tax rules are not changing. What's allowable, what's not allowable to be offset against your income, whether it's against rent or against trading profit, that's none of that's changing. This is just reporting methodology systems. And this is UK tax joining the modern world. A lot of people think this is really heavy-handed, MTD, Making Tax Digital, but they haven't thought it up themselves. Other countries have similar systems, and it will be, in the end, better. Making Tax Digital for VAT has been in for a few years now, and a lot of people said, oh, it was outrageous. They thought it was a terrible imposition, but now we're all used to it. It's actually a big improvement. And it's got the MTD for Making Tax Digital for self-assessment. It's a combination of better records, much better records if you use the kind of modern systems, and feeding information directly into HMRC. Literally, absolutely directly. No keying in of numbers. And if you think it's intrusive, this is just an example. In some countries, and I'm not sure to what extent HMRC and the Treasury consider this for UK, they have systems where if you want to make a payment to another business, you have to do it by paying the government, and the government pays that other business. That way they know exactly what's been paid and what's not been paid. So this is less intrusive than that. A lot of people have whinged. Is that the right spelling of whinge? Whinged about the whole process. And it has been postponed more than once. But it's not going away. It's definitely happening this time around. We've got a budget coming up. As often, so often there's loads of speculation what's going to change in the budget. Making tax digital is not going to change. Systems are all in place. They're being tested now. We're testing it ourselves. Okay, this is a quickie now. This data is slightly out of date now. So it's a recent survey. It was a few months ago now. It said of self-employed traders, 31% had never heard of Making Tax Digital, 32% had heard of it, but were going to do nothing about it until maybe later. More worrying, at that time, 42% of accountants were not prepared for MTD, and 41% were somewhat prepared. That's 83%. Hell, I mean, if we're not prepared, Lord. Those figures, I'm sure, are out of date. I'm sure the majority of traders have now heard of Making Tax Digital. When I say self-employed traders, I mean that's people who declare self-employment income. It might be from freelancing, it might be from running a shop, it might be buying and selling, it might be consultancy work. But it's what goes in to the self-employment pages of your tax return, where you're described as a sole trader. Okay. When? Timeline is like this, and it's all based around numbers in terms of your income. So if you have income of more than 50,000, and that's gross income, that's rent income, not profits, not after offsetting costs, or if you're not landlord and renting out properties, if it's your sales figure. It's not your profit figure, it's your sales figure. And you have to add them together. It's the total of the two if you've got both. And when it says those with incomes over 50,000, it doesn't mean if you've got income running at over 50,000 in April 2026. It means if the figures in the boxes on your 2024 to 25 tax return total more than 50,000 for rent and sales, you're in. And you're in from April 26. If those two figures come to less than 50,000, then you will be in from April 27, year after next. If the combination of rent and sales is over 30,000, and if you've got either with more than 20,000 or add the two together and it's more than 20,000, you will be in from April 28. At the moment, incomes lower than that would not be in Making Tax Digital, but that remains to be seen. I think they are, in various respects, they are HMRC are waiting to see how well the system works. My suspicion is the system's going to work very well. Unlike a lot of HMRC system rollouts, there's been a lot of thorough testing going on. We're in the second year of trials. And just to reiterate, those limits are for business plus lettings income, and that's sales plus rent. Sorry if I'm repeating myself, but you get taxed on profits, which is sales less costs or rents less costs. But these limits are for rents and or sales. If you're over this 50,000 limit in your 24-25 tax return, you will receive a brown envelope. That brown envelope will say that you are mandated. And if you're mandated, you have no choice. It's a statutory obligation. You're legally required to comply with the Making Tax Digital regulations. Run through the implications. And there are two aspects, two prongs I've put here. You have to have digital books, digital records, and you have to do quarterly filings. So Maybe you've been around a long time, you've been doing tax returns, maybe you did them before self-assessment came in. They're all once a year. This time, no, quarterly filings. And there's no halfway house. You have to have a digital record. That digital record has to include the income and the costs. The threshold for being included is just the total gross income, the rents or the sales, but the digital record has to include the income and costs, what they were, when they were, details of the transactions. And at the moment, it says it looks like, well, I don't think that's going to change now. The one thing you won't actually have to include in the digital record is the names of your suppliers, but any decent system would record that anyway. And what does it mean, a digital record? Well, first of all, it doesn't mean paper records, no matter how immaculately kept. That's history. Unless you want to keep paper records and help pay someone to key it into a system. Or there are software options which can capture documents if you scan them, etc. But really, if somebody's going to scan them or key them in, they're keying it into software which will do the digital filing, which will be a digital record which will do the quarterly filing. And we would recommend use real software that's built for the purpose. There are quite a few pieces of software that are built for the purpose now, and we know which ones we recommend. They're brilliant, to be honest, and clients really love them. There are some workarounds if you really think, I really want to keep with my spreadsheets. It doesn't mean you move away from having to have a digital record, but those spreadsheets have to meet certain criteria. But then you have to use what's called bridging software, where there's an automatic link between the totals of these pieces of information, when and where, in the software directly to HMRC, and that's who creates a bridge between your spreadsheet and HMRC. Frankly, I can't imagine a reason to do that. But on the other hand, some people love spreadsheets and they really think, I've been using the same spreadsheet for 40 years now. That's not possible, actually, because Excel wasn't around then. Lotus was, if anybody remembers Lotus. But if you've been using the same spreadsheet for many years and you really want to keep on using that, there are ways around that. That's not what we recommend. We would definitely recommend real software. So there are 3 slides, 1, 2, 3, about choosing softwares. By the way, HMRC launched a new tool to choose the right software. And what I'm about to say is actually unfair, I think, because I think it's been improved. But when I road tested it, it was pretty bad. It's recommended one good piece of software as an all-in-one solution. But I know that the version available to non-accountants does not include one of the things you have to do, the year-end return. Now called an annual update. I should change the wording there. It recommended a software that will only do rentals to a sole trader business. When I was just trying all different options. What was it? Oh yes, it also, of course, recommended some softwares that I've tried down the years when a new client has said we use this software, and I wouldn't go near them. They're a nightmare, some of them. If anybody's ever seen Cashflow, that with a K, I'm sure it does some things okay, but it was a nightmare to use. So choosing software is number 2. Why is it softwares? What's the S? Some software will do your trading, your self-employment, your sole trader records, or your rental records, and it will go on and do the quarterly filings and do the year-end tax return. And maybe some of them are okay. We wouldn't recommend that. I think you're trying to make I think I stand to be corrected. There may be some good ones out there. Software that's designed to do a self-assessment tax return and then adding in some detail to do the trading and rental records. Better mix. Also, in our trading, there's best of breed software. So use specialist software that, or it's not specialist, makes it sound highfalutin. Software that just does what you need for your freelance, your trading, or your shop, or whatever, and one that does quarterly updates. Those are the things that have to go direct to HMRC from the software. And then use best of breed tax return software, now annual update software. We know exactly what our mix will be for our clients. Because we know good tax return software can do some really sophisticated things in terms of tax, which the other softwares won't. So hence two softwares. Tax return software will probably be the one you don't need if you're a trader. Is there any accountants listening? But your accountant will use to do the annual, currently self-assessment tax return. It will become an annual, effectively a tax return, but it'll be called an annual update. And one for doing trading, recording your trading information and doing the quarterly filings to HMRC, and one if you have landlord let property as well, then a different one for that. The detailed transactions, they'll be in your Making Tax Digital quarterly software. You'll be using this potentially every day, depending on what you do. And it will do lots to help you, which most all-in-one software will not be able to. One thing, you'll be using this every day. Well, clearly in some situations you won't. The softwares we recommend will do a lot of stuff automatically. They might be doing that every day. But one specific thing I should mention, if your business is retail, like a hairdresser or a shop, you don't have to record your customers. You don't have to record each individual sale, but you do have to put in your daily total takings into your, if any MTD compliant software for a retail situation, you'll have to enter your daily totals, not weekly or monthly. So if you're open 260 days a year, that'll be 260 figures. For our clients, we're devising workarounds that will enable the MTD software to be populated in a really easy way, maybe a couple of clicks on your phone. Okay, third one about choosing software. We'd recommend this one. It's called Dext Solo. Some of you may have come across Dext in other situations, maybe as an employee somewhere else. It used to be called the Receipt Bank. This Dext Solo version is designed for people who are self-employed. And for costs, you just take pictures of receipts, or if you get invoices for costs, you just forward them straight into Dext, and it will do lots of things with it that you won't need to do. It'll just populate the data for MTD. With all you've had to do is take a picture. And if you need to send sales invoices, you can create your sales invoices within Dext Solo, and you can send them online from Dext Solo, so that your customers get an email with the invoice. And at the same time, Dext Solo will tell you who's paid, which your customers have paid, which invoice is paid and which are not. It will link directly to your bank. And that's a common feature because if you're a landlord, we have no hesitation whatsoever in recommending Hammock. And don't worry about, you don't need to write this down. There are links to these things later on. Letting income. People who are sole trader, self-employed, they're a bit more used typically to keeping records to be able to enable them to do a tax return. If you're a landlord, maybe there are not that many transactions. Maybe you're used to just put a box with 20 pieces of paper and passing it to somebody to do your tax return. Maybe you just send them a spreadsheet. Maybe you just send them some notes in an email. Hammock will make all that unnecessary, and once you add in the properties to Hammock, we can help you set this up. Instantly, you see the pictures of the property, you see the valuation estimates of the property, lots more useful functions. We will help you if you need to connect Hammock to your bank, the same as Dex Solar will connect to your bank, and we tell Hammock which types of money in and which types of money out are for property letting. Some landlords do have business only bank accounts, but that's actually quite unusual for a landlord whether it's buy to let or accidental landlord or whatever. Typically, it's one of your personal bank accounts. Maybe it's your only personal bank account, but just the fact you link your bank account doesn't mean that everything that's in the bank account will be included in your rental record. You just tell Hammock, which of course uses machine learning and a bit of AI to be consistent in coding transactions. So if you receive rent, you tell Hammock, populate a couple of little guide boxes to tell Hammock this is always going to be rent. If you receive rent from a letting agent and they deduct their fee, you can tell Hammock that's what happens, and it will do both those aspects will be dealt with. Well, my feedback is that clients love it. If you work with us at Naked Accounting, we will deal with the software subscriptions and the setting up systems. We will need to sit with you to do that, or sit online, and we'll make sure the quarterly filings are all done. And why do you need to make sure they're done? Well, the quarterly filings, they've got to be direct from the digital software. The software has to link directly to HMRC. You cannot key in the numbers. You can't log into HMRC and put in your rents received, and those quarterly filings have to go through what's called an API, automatic program interface. I think that means that's about as techy as I can get. But it means that your software, you check it, end of the quarter, press a button, and it goes straight to HMRC. The 4 quarters have to be January to March, April to June, July, August, September, October, November, December. You can't have a different quarter. You can choose when we set you up whether to go for 1st of April to the 30th of June, or the tax quarter, 6th of April to the 5th of June. I think probably the latter is easier, but not. It depends. If you're a trader and you've got your records running at the end of the month, then maybe not. So you do make 4 filings for the 4 quarters, and then you have to do year-end adjustments, and that goes into a filing that brings in all your other personal tax data. Excuse me. So just to be clear, the Making Tax Digital quarterly updates, as they're called, the filings that go to HMRC, they only include your letting income or your self-employed income. Or if you've got both, you need to do 2 filings for 2 separate systems. That doesn't include dividend income, salaries, claims for capital allowances. Sorry, that's for buying equipment. I mean, there's a whole gamut of things that might go in your year-end tax return. I'll put it in quotes because it's technically not a tax return, but you do have to do it in each quarter, and then you do have to do an annual update, as I think it's going to be called. The annual update is the one that calculates the tax. Just to be clear, the quarterly filings are quarterly filings. They're the statutory requirement, and you do have to be careful because if you run late on them, the next slide, bad news. But there's no tax. The quarterly filings are passing data to HMRC. There's no change in the tax dates. The tax payment dates stay the same every January, or every January and every July. That's not changing. As I said, tax isn't changing. It's just the reporting. And if you do VAT returns already, because you've got a business, this is not, VAT returns are not your MTD filings. They are completely separate. You might even have VAT quarters that are different to the January to March, April to June, etc. You can change, I suggest, the VAT returns to make them match and make life easier. And you have effectively 5 weeks to get things done, get the quarterly update in. First quarter for people who with incomes over 50,000 will be April 26 to June 2026. That filing has to be with HMRC on the 7th of August, i.e., you've got July and first week of August to get it right. Same with all the quarters. In a sense, if you've got systems, you should be fairly relaxed. You do not have to go back and change previous quarters. If you realize something was wrong in January to March, you don't change it in the April to June quarter. If something's wrong in April to June, you don't change it in any of the later quarters. Because the updates that go to HMRC are cumulative. So you're only sending in the quarterly update information in total. So the quarterly update you do for June, July, August, September includes 6 months income or 6 months totals from April, May, June, July, August, September. And when you do the quarter 3 filing for October, November, December, you do those updates include April, May, June, July, August, September, October, November, December in total. And if for some reason one or more of the quarterly filings is wrong, even if the quarter four filing for January to March at the end of the tax year is wrong, you're not paying tax based on those. You've got an obligation to do it, keep a digital record, but the tax calculation is done in the year-end adjustment, the year-end tax return. Do be careful, this can quickly add up. If you've got VAT registration for your business, a letting business, then you have to do MTD for this sole trade, you're up to 4 plus 4 plus 4 plus 1. That's 13 returns. And that's ignoring payroll if you're an employer. You'd have to do one quarterly update for each trade or letting business, just to be clear. You don't do one, it's not a filing for the person, it's a filing for the trade or for the letting business. I think because you can do a correction in the year end, I wouldn't fret unduly about it, but you might as well do it right. The regulations say you should be doing the MTD quarterly updates on the same basis, cash or accruals, as you use in the tax return. That may mean nothing to you. I'd say don't worry about that aspect. If we work with us or any other accountant, I'm sure we'll get it set up. But it's the year-end tax return that calculates the tax. Penalties, stupid joke. Penalty points add up, don't make prizes. So it's the Making Tax Digital for Income Tax Self-Assessment, MTD. It's penalty points are on the same rules as the VAT penalty points. So they're cumulative. 4 lates equals 4 points equals £200. Talked about how many returns you could have. If you've got a sole trade or self-employment or freelancer, or however you refer to it, and you've got a VAT registration for it, and you've got a letting business that is in MTD, in the second year, you could be up to £3,000 in penalties, and that's just on the quarterly filings. Best avoided. A few things specific to landlords. The filings, the quarterly updates, are for each person. They're not for each property. And what follows on from that, if you're joint owners, what goes into your MTD quarterly filing, your Making Tax Digital quarterly update, is your share. Again, I can't recommend it enough. Hammock will be certainly compliant, but in Hammock, we set it up. It knows which properties are jointly owned, which ones are not. It'll create your Making Tax Digital quarterly filing made up of the right mix of property incomes. There are two easements. If you've got jointly owned properties, you could do only 3 times gross income and only the fourth quarterly update with expenses. I mean, if you're using a decent system, I'm not sure what benefit that is, to be honest. Um, uh, and you can have one set of filings for joint. Don't worry about these aspects. We use Hammock, and it will do it all for you if you work with us or just use Hammock yourself. One thing I'll cut in now with a question that people have been asking. Making Tax Digital applies to sole traders and to people with letting income. It does not apply to partnerships. So if currently for your sole trade, for your self-employment income, you're in partnership with somebody else and you file partnership tax returns, as well as your individual tax returns, you will not be mandated into MTD as yet. Partnership and Making Tax Digital was bound to come, but we don't have a timescale for that. But perhaps more of a point, if you have jointly owned properties, that does not make you a partnership. A lot of people have said, well, it is a partnership, whether it's yourself and your spouse or yourself and your siblings or just a mix of owners of property. Just having joint ownership of property that produces rental income is not a partnership. You will still be within Making Tax Digital. It is possible to have a partnership with letting income, but it's actually very difficult to qualify for that. You have to kind of be running it really as a business. And it doesn't mean you're business-like about the way you deal with your tenants. It means you actually have to be doing stuff, supplying lots of services. Running a business it's really unusual to have a partnership that qualifies as a partnership that is a jointly owned a letting business with jointly owned properties. Maybe that should be on the next page. A lot of people have assumed there will be free software. There are some. HMRC certainly are not creating any Making Tax Digital software themselves. Some people have been used to using maybe the HMRC's own payroll software or HMRC's tax return software. You will not be able to do your tax returns or your quarterly filings through the HMRC software. It will not exist. And there will be some softwares that may be compliant with Making Tax Digital, which are actually free. But I think virtually all of them, I stand to be corrected, are free until you have more than a certain number of transactions or want to use something other than the most basic facilities. And suddenly you notice the deal with software subscriptions, you suddenly realize, actually, I need the paid version. So another myth, Making Tax Digital will tell you your tax bill. Well, as I said, the tax isn't calculated in the Making Tax Digital filings. You don't pay any tax based on the quarterly updates. HMRC will estimate your software. And if you use Hammock for properties or Dextolo for self-employments, sole traderships, then those softwares will show the HMRC estimates. But you do have to take that with a really big pinch of salt. It's only the year-end return which will actually calculate your tax. And in some cases, if you've only got your sole trader business and you don't have anything else that's taxable or any other claims to make in your tax return, maybe the HMRC estimate will be accurate. But please, strong advice, please don't rely on it. We will certainly only be spending a very limited amount of effort to try and sanity check what HMRC is estimating. I've heard this. I don't need to think about this till afterwards, like I do now for self-assessment. Well, you can't, because the books have to be done right. The transactions have to be in the system from day one, 6th of April, if you're in next year. If you're going to have the quarterly updates ready within inside a month, you have to keep running the books as you go along. You certainly cannot come along later and say, oh, could you do those quarterly updates? I haven't done any of them. you'll be into penalties. Um, yeah. Uh, okay. What you need to do, a little summary. Get some professional advice. Manage your records effectively. Yeah, I know what we'd recommend, but don't come to it next July and think, oh, I've got to do a quarterly update. I wonder how I'll do it. You need to have your records running up to speed and utilize software solutions. There are others other than Dex Solo and Hammock, certainly. If you're a client of Naked Accounting, that's what we'll be setting. We'll be setting clients up on these things. Okay. Any questions? Questions. I can find it on the screen. Surely I don't have to do this stuff. Yes, you do. It's a legal requirement. Um, yeah. If I don't have self-employment, I don't have property income, you're not in Making Tax Digital. You will not be mandated. You will not have to go in. If you have, let's say you've got a property you let out for £1,000 a month, your figure for the thresholds is 12,000. If you've got a salary elsewhere of 50,000, doesn't matter. It's only self-employment and property income that you need to build in. Yeah, good with that one. Surely there are exemptions. Yes, there are. There are exemptions that will take you out of Making Tax Digital. You're unlikely to qualify for them. If there's a phrase digitally excluded. If you're digitally excluded, then you can request you're taking out of Making Tax Digital. I mean, if you can use a computer, you're not digitally excluded. Yeah, I think I've covered that one. Yeah, yeah. People, I've seen this one before. I'll just put some estimates in for the quarterly filings, and I'll get my accountants to do the tax return same as normal. Bit difficult when you have to be doing it from a digital record. You'd have to be creating a load of dummy transactions to create the dummy filing. You might as well keep your books in good order. People love the softwares we're talking about. The Hammock software, let's go to the next slide. Hammock software, it keeps track. It tells you if your tenants are behind with the rent. That's quite useful. Why would you choose not to? Certainly, this is not an area for putting in round sum estimates and then sorting it out later. That's just not the way it works. And those two separate things on the screen, the one on the left is Hammock, the one on the right is Dex. They've got those creature that they're using in their marketing. But those squiggly patterns, they're QR codes. So if you just open the camera on your phone and point it at it, it will take you through to links that will give you more information about Dex Solo and Hammock. Again, could not recommend them more highly. Any more questions? We'll leave that slide up just for a moment because I know sometimes the phones won't do the QR code reading reliably, but I'll just leave it up for a second because the only next one slide is us, Naked Accounting. That's a QR code that will take you to our website, designed by our very nice marketing people. I'm saying that because one of them is listening. But we're really pleased with the new websites, and those are all the different contact details, either myself or a generic hello@nakedaccounting.co.uk. Maybe you realize after listening to this webinar, this is Making Tax Digital is not catching you, or maybe you're not sure. feel free to reach out. Just phone that landline number, or probably better still, just drop an email to malcolm@nakedaccounting.co.uk. One thing I would mention, and for those of you existing clients, you may have seen this already. We're in the business of growing. We've got all our systems tied up. We know what we're doing. We're happy to help more clients, whether it's Making Tax Digital, or just self-assessment, or you got a bigger business, whatever. We're running a referral campaign, so there are some rewards to be had if you refer another trader or landlord or tax return client. I think start at £100, bottles of wine if you want them, really nice chocolates from a great place called Coco Amore in Leicester. Just a bit of fun, really. But yeah, why not? Do feel free. Okay, I'm just going to sit tight just for a moment in case any more questions come in. Okay, no more have come in. If you've got any questions, perhaps you want to ask them one-to-one, you don't want me talking to an audience about them, do feel free to reach out. But other than that, thanks very much, and hopefully we'll see you. But if not, I hope you've learned something today that's of use to you or friends or relations. Oh, question. Tony, what's the case if rents are late or missed? The different quarters are going to vary. Will that be a big issue? No, no. Going back to that slide where I talked about cash or accruals accounting, if it's accruals accounting, the rents will be included even if they're late paid, or if you're on cash, they'll only be included in the MTD updates when you receive the cash from the tenant. But in either case, it's the year-end update that calculates the tax. If you run your system, make your quarterly filings, you're being compliant. That's what this is about. It's about making the filings. It's not about calculating the tax. And certainly you can put right things that you realize you may have got wrong with false assumptions about rents received or not received, or other things in the annual update when you calculate the tax. Okay. Any more for any more? Okay. Right. Well, thank you, everyone. And as I say, do be in touch if you want to. And I don't think we fixed the date for the next one. Almost getting to Christmas season, so we'll probably run one early in December or again. And if you want to listen to it all again, you can then. But things are changing gradually, so there might be some changes then. Of course, we've got a budget in between. As I say, I don't expect any changes to Making Tax Digital in that budget. They got bigger fish to fry. But who knows? Okay. Bye, everyone.